Good afternoon, everyone. This is Joe Henches for Beyond the Chart, Sunday afternoon, where we help traders learn more about the markets, make better trades, and to be successful. Hope everyone's having a great Sunday afternoon. Let's take a look real quick here at the Dow Industrials. The Dow was up 167 points on Friday, so almost got everything back from, we closed on the 6th at 746. And we gained it all of it back that we lost on Thursday. So, we talked about how this was such a bearish candle on Friday. We talked about this. This is Thursday's action, and this is kind of an engulfing thing. And I think the thing about the candlesticks that I've talked about briefly before is I've never felt like I could just rely on one single snapshot that says, okay, this is always bearish and this is always going to work. I mean, you just got to be careful. And really, I think I'm not what you would call a candlestick practitioner. Okay, I look and watch for different formations, but they would say, okay, you need confirmation, like another close down below here, that this truly was a bearish action. And it's going to be the same way with this bullish bar. I mean, it looks really bullish. And the other thing, when we look at the S&P 500 here in a minute, on an hourly chart, it does look like a reversal. I mean, like a correction has just completed, but we'll have to wait and see how that plays out. So right now, I still think we're in a bullish mood coming off of the low here in October. We got this wave one. I think we just corrected a wave two, and I think we've got another impulse wave coming here. Some people aren't quite as bullish, but that's my reading at the moment. I think that we are going to see ourselves, see if I can do this. I think we're going to see ourselves kind of get out of this congestion and break out for one more major push up. It just kind of makes sense to me. But let's take a look at go back to the mouse. Take a look at the S&P 500. Okay, a similar type thing with the very bullish bar on Friday. And the one thing I wanted to point out in here is that you'll notice that as we made new highs, the new highs would continue to hold in terms of the pullbacks until all of a sudden they didn't, and then you were in this kind of corrective pattern. So that's one of the things to look at. I mean, it made this high in May. It didn't hold on a correction pullback, in July, August, and so we had more of a correction. And so the same thing here, we're looking for this to hold. And right now, it's giving us a signal like, yeah, maybe that's going to work. You can see the 1 day below the blue bar, the 10-day exponential moving average, and then we're closing back above it. The Nasdaq. Nasdaq's a little bit different scenario. We've got this, again, candlestick formation. It's called a harami. I'm probably not pronouncing that correctly, but in Japanese that means pregnant. So you've got this inside bar that's inside this big down bar, and this is a bullish up bar. Now, this doesn't always signal that a new upswing is coming. I mean, I've seen it here, but what about here? It's kind of, maybe it was a little bit of a prelude that it was coming, but then you got it at the bottom down here. I don't know that I had any more outlined. I think that was about it. So next thing I wanted to look at is the XLF, the financial index. This was kind of interesting. I mean, we were getting this divergence, this pulling, we were getting closes below the 10-day exponential moving average. And then now all of a sudden here on Friday, this move has gone up, almost looks like it's broken this small downtrend line, closed back above the 10 after we'd had 6 closes below the 10-day. Okay, now we're back above the 10, a nice close above this trend line. And you look at, we're back above the 50 on an RSI. It's kind of interesting how a lot of times, let me get rid of this. A lot of times when you break above the 50, you're getting a continuous move. You break below the 50, it has a tendency to be more to the downside. So it's not always the case, because sometimes it gets choppy. I mean, there's no guarantees on any of this stuff, but it's just something to think about as you're looking at it. You got down below the 50. And you break above the 10, you break above the 50, it's kind of like a little bit of a confirmation. Okay, let's take a look at the short-term trading index. We got a really extreme because it's so bullish. All the volume was moving into the advancing stocks naturally. So you got a really low reading here, but I've found that when I go back and look at these readings on October 10th, now here this was right almost on the high. Okay, but this didn't give us the high back then. So I have a tendency to rely more on this blue line, which is the 10-day exponential moving average of this reading. And when it gets down below the red line, it has a little bit of a better signal. Okay, so like right here, September 9th, and right here, July 22nd. So if you go back and look at the S&P 500, July 22nd was right in here, right there actually. So it's a little bit of a prelude, and you just kind of wait to see does it break and close below the 10-day as a signal. That's kind of the sign. And what was it, October 10th? It was way too early. So it's just another one of those things. You just put it all in the pot and start looking at everything. Now this high-low indicator, which is kind of interesting, net of new highs minus new lows. Okay, and you can see we kind of went a little bit lower on Friday. And so what I'm looking for is these extremes to kind of give us a little bit of a signal as we get to here. Is it a possible turning point? We're not anywhere close to any of those types of moves right now. You can go back. I mean, look at this was September 14th, 2012. And if we go back and look at September 14th, 2012, was that close to being a high? Well, September 14th, 2012, we're almost right there on the high. So that's kind of I like to look at that indicator, new high, new low. All right, the stock I want to take a look at today is Apple. Just kind of let's see where we're at. We got a few minutes here. Well, I tell you, on a monthly basis, let me go back to this. This stock has just been incredible, as everybody knows. Now, this stock came public on December 12th, on my birthday, 1980, December 12th, 1980. And when I look at a monthly chart, when we look at this, it looks to me like wave 1, a huge complex corrective wave 2 as it went sideways. And then the year that Steve Jobs comes back in and becomes CEO, it starts to take off. And wave 1, wave 2, wave 3, wave 4, wave 3. So I think that we have completed a big major third wave up, and we're in a corrective mode now. Now, that means that it should be correcting this entire move here. Okay, so we've got a lot to correct. So now when I look at this on a weekly basis, it starts to look like a down move, and AB, we're going to need to see kind of a zigzag correction because, wave 2, as I just mentioned, was very complex and long. Then this one should be short and sharp. It should be a zigzag. Well, that's what I think we're getting here as we're coming down. I think we got our 5 waves, our A. Now we're looking at B, and then we'll get a down move C. And so what I'm looking at right here is we've got kind of a rising wedge, okay, on a daily chart, and I think we've completed 5 waves. We're looking for 3 waves, A, B, C. I think we have another move up, and based on Fibonacci projections and this triangle, I think we're looking at a minimum move up to about 570 on the stock, and then it's going to roll over. Do one of these. It's going to go up here, and then it's going to come back down. So that's my best estimate as to what I'm seeing with Apple right now. So that's about it. I'll be back later on today with some key trades for the coming week. Hope everyone has a great Sunday afternoon, and we'll talk to you soon. Take care. This has been Joe for Beyond the Chart.